Hello everyone, this is Romulus with Backpack Trader. Couple of down days in the stock market. Something that helps me, however, is to step back sometimes and take a look at the big picture. Why don't you join me? Each one of these sticks, they're called candlesticks. They represent one day of trading action. Green is up, red is down, but through the magic of technology and computers, we can change the time frame. We can do a 1 minute. We can do 1 hour. We're already on a day. Let's go to a month. Oh, now all those little candles, each one represents an entire month's worth of trading. Just from this chart, we can get activity all the way back to 2007. It's not the S&P 500 that I want to show you. It's not the stock market that I want to look at from this big picture. It is the bond market. That's right. The interest rate situation. The red candles are down days. The green candles are up days. That big red line, however, is an average price. That's right. Just take an average price of some period of time. In this case, it's 200 of those candlesticks. So we're going back 200 months. That's quite a bit of information, Romulus. We're trying to find something that can create an edge. Perhaps we've uncovered it. You could see that this 200-month moving average created a level of resistance to the rising interest rate environment into the fall of 2018. All right, let's go back then. We have to look at a lot of data here, everybody. We're going back. That 200-day moving average, 200-month moving average is an area that the interest rate environment hasn't been able to get above for quite some time. And look, it extends even further back. Now it's coming right up against that line today. That's what the big picture is showing us. Right this second, earlier this morning, the U.S. 10-year, which is the amount of interest that our federal government in America pays to borrow money for a 10-year period of time, which hit a high of 2.66%, also bumped right up against that big red line. And now it's starting to fall back a little bit. Does it mean that it's going to just crumble from here? No. There's something in trading called backing and filling, retesting. These are all technical terms that describe the actual activity of trading, investing on a daily, weekly, and, well, right here, a monthly basis. And speaking of basis, there's been quite a basis point move in the interest rate market over the last several months. That's reflecting in the price of oil. That's reflecting in the price of all the food that we buy every single day. On and on it goes. So let's come back out of that monthly time frame and switch it back to a daily. See, now we're back, and let's look at that 10-year one more time to see if it's reacting to anything else that might be creating a bit of an analytical edge. So the interest rates right now are the highest point that they've been since the spring of 2019. You see that all the way back here? That's right. March and April of 2019. That's how far interest rates have come and gone, falling to record lows. And when I say record lows, I don't mean by recent historical comparisons. We're talking about in the history of the United States. The 10-year note, the 10-year yield, is a tradable bond that has been active dating back to 1792, give or take. And the average yield that the U.S. government has paid dating back to those 130 years ago has been 7.1%, and it's still trading today at 2.6%. It's up a lot from where it was a couple of months ago, but still dramatically lower than just its historical average. Could this be the greatest mean reversion trade of all time? Possibly, but judging from that big red line that we saw a moment ago, it could take a little while for that entire situation to revert back to the mean. All right, fantastic. Okay, so as we were looking at the stock market pulling back a bit today, and this is, once again, we have too much information on the screen, don't we? Yes, we do, Romulus. Yes, we do. But this is once again dealing with the interest rate situation. Yesterday, there was a Federal Reserve governor that stated the amount of money that the Federal Reserve has on their balance sheets, which they were adding liabilities to this balance sheet. They were buying assets. They were adding liabilities up until the month of March. Then they stopped buying all those bonds out there. They were doing that to the tune of about $120 billion a month. since post-COVID until last month. Last month. Then they started raising interest rates. But not only are they going to continue to raise interest rates, you're going to see a 50 basis point move. That's right, a 50 basis point move at the next Federal Reserve announcement, which is coming on May 4th. They're also going to announce a pullback from the balance sheet, and they're going to start rolling back not 120 billion a month, which is what they bought, but about 100 billion a month. And that's more than they've ever done before in the history of the Federal Reserve and the markets, which is part of the reason why we're seeing such up and down action lately. Combine that with a war that's ongoing still, and we have a situation which is getting a little bit unpredictable. Volatility, which is the up and down action of the market, is measured by something called the VIX, VIX right there. It's up 15% today, up 13% yesterday. That's showing that fear. Today at 2:15, there's going to be a release of the Federal Reserve minutes dating from the mid-March area. That's when a lot of people are looking to try to get through those tea leaves and decipher what they think they understand. I think it's a lot simpler than all of this. And here it goes again. Fed raises 50 basis points in May. They raise 50 basis points in June. They start retracting the balance sheet by $100 billion a month for I don't know how long, because right now it's at $9 trillion. It's going to take a while to pull that thing back to normalcy. And then we'll see. We'll see. But the Federal Reserve is acting, the bond market is acting, and the stock market is reacting. What about you? Hey, real quick, something I want to show you at the end of this video. However, tomorrow afternoon at noon, that's April 7th, we have a webinar. My partner and I, TJ, we're giving a free webinar tomorrow to explain some of the tactics, techniques, and strategies that we use to profit from all kinds of market conditions this year as well. Please click the link below, sign up. Again, this is not for current centurions, which is what I call my Roman Romulus Legion. It's not for my Centurions, it's for anybody new. My Centurions, you guys already know this stuff. So click that link below right there, sign up. Hopefully we will see you tomorrow at noon. Okay, on to the last aspect of today's shot.